What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Axel Christensen, Chief Investment Strategist for Latin America at BlackRock. Emerging markets look set to benefit as U.S. growth holds up, inflation cools, and the Federal Reserve prepares to cut policy rates. This week, I'll give you our outlook on the region. We like emerging markets as upbeat risk appetite carries on. We see broader support for emerging market assets as markets price in a rosy macro outlook and fears of recession have faded. But selectivity is key. As markets have priced in rate cuts, 10-year Treasury yields have slid, narrowing the gap between them and hard currency emerging market debt yields. But spreads remain near the long-term average. We like hard currency emerging market debt because it includes countries with higher quality credit ratings and is often cushioned from any local currency weakness. Emerging market stocks underperformed developed market peers last year, and that trend persists. China's elevated equity volatility and policy uncertainty prompts us to take above benchmark risk elsewhere. China's share of the MSCI Emerging Market Index has edged down, while the weight of countries like India has climbed, according to LSEG data. Valuations for Indian stocks look high on the surface, yet we think factoring in megaforces could bolster their potential corporate earnings growth. We find country-specific opportunities via the megaforces or big structural shifts we track, like geopolitical fragmentation and demographic divergence. For example, Mexico is increasingly acting as an intermediate trading partner between competing blocs. And India's young, growing population stands out. India's talent pool, startup ecosystem, and software firms with a global footprint also make it an up-and-coming hub for artificial intelligence software, in our view. Digital disruption and AI is a megaforce we see being a key driver of corporate earnings. These and other megaforces may boost the appeal of emerging market assets in selected countries. Yet, significant investment in critical infrastructure will be needed for these benefits to fully materialize, in our view. Public reforms and political stability are also key. We stay overweight emerging market hard currency debt and neutral overall on stocks, but overweight Mexico and India equities. In our view, structural shifts favor areas like infrastructure and real estate in multi-aligned countries like Mexico. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you enjoyed this episode, subscribe to Market Take, wherever you get your podcast.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com